about. Well, with that, let's go on and welcome in our next guest on the show. Our alpha manager, Tushar Pradhan, director at HXGON Partners, is with us. Tushar, thank you so much for joining in. So everyone's asking that same question since yesterday, right? You've got this big GST cut, reform delivered. You have a 7.8% first quarter GDP print. CAD is coming down. The RBI has been fairly generous. Yet the market at the nifty level remains where it is. What will it take for the market to make an up move? Your thoughts?
Yeah, I think one of the situations that always confront us is that the market doesn't behave the way that we want it to. It has its own mind, really. But here, when we talk about the market and its ability to move from here, there are two aspects that we have to consider. One is that what are the valuations that most of the companies are trading at, which make up the index? And what is the kind of earnings growth that one can expect from here to justify those valuations? So clearly, from a longer term average perspective, the Nifty is trading still higher than its average multiple. The mid cap and the small cap indexes are actually much, much higher than their average multiples. And the delivery in earnings growth, especially for the mid cap index, has been pretty strong. So it's been trailing 12 months, 21% earnings growth, which kind of justifies its 31 times multiple. But look at the 500. The Nifty 500 has delivered only 7% trailing 12 month. And if you look at the large caps, they've actually not even been very low single digit as well. So I think that's really where the problem is. So no matter what the macro news can be, till the bottom-up earnings momentum starts to pick up, I don't think the market is going to make any move. And I think for that, we need to work and wait for the next couple of quarters.
There's a discernible shift towards consumption, particularly in that auto has been picked out as a favorite. Have you also aligned your portfolio pro-consumption, consumer durables, staples maybe, auto stocks in particular? How has your portfolio changed in the last 1 month in anticipation of the GST reforms, and what's come through?
So I think on consumption, especially on FMCG per se, we are not very excited no matter what is going to happen, because even if there is a change in terms of the volumes, the valuation at which all of these companies trade at are really not exciting from our perspective. When it comes to auto and especially auto ancillaries, I think there is enough excitement there. So we definitely have changed our portfolios to kind of reflect that sort of anticipated consumption coming in. However, the end game is not really very visible. I'll tell you why. Because when we talk of a reduction on GST, there is clearly going to be an increase in demand. But will that translate into something substantial and say multi-year from a structural perspective? That remains to be seen. So there might be a blip, there may be a Diwali dhamaka as they call it, and there might be a surge in bookings, etc. And that's good enough from a sentiment perspective, but I think it also means that we need to be pretty circumspect about what to add and what not to. From that perspective, I think auto looks pretty exciting, and not only the OEs, but I think the ancillary chain is something that we are very interested in at this time.
Hi, good afternoon. Good to see you in. What about the worries with regard to the state finances taking a bit of a pullback? Because GST cut, everyone is celebrating. The center's revenue may not get impacted too much. But at the state level, that could impact various companies, particularly those that are heavily dependent. Do you see that as a worry? And do you see it maybe as uncertain for the next few months at least, which in turn could impact some of these companies?
I don't see how much that will have an impact, because the state finances are clearly something between the center and the state that they will have to work them out. There will be probably a larger share that the states will get from now on because of the benefit which is going away to its treasury. But I think that's not something that companies need to be worried about at this time. I think it's very positive to understand that the whole GST structure has become simplified. I think that is something of a long-standing demand across all manufacturers, where the complexity of the system itself was driving people to the ground. I think the simplicity is something which is going to really take off. And I think going forward, that is something to focus on rather than any dip in the state collection, etc.
Okay, got it. Tushar, but are you in the camp that believes that the single biggest sentiment driver, or the one that can bring back the animal spirits, will be some kind of a resolution on Trump's tariffs? Because in the last 7 days, we've got a good GDP print. We've got this GST bonanza as well, which will be structural in nature. But the market is still, very, very nervous. Earnings obviously will drive everything else. But do you think that will be the big trigger that could see the market yet again get on its way up?
I think so, very much so, because what you see is that the market always are in the interim driven by news and sentiment. And I think currently the sentiment and the news are bad, given what the headlines are and what we see, largely in our faces. But what is happening on the ground is essentially a change from a macro perspective for a significantly better future. So we are talking about increased momentum in demand. We are talking about rationalization, which is going to be beneficial for a company from a long-term perspective. We are also talking about the surprising level of GDP, which has just been printed in the near quarter. We are talking about an RBI, which is very, very cooperative, I would say, in a sense, allowing for liquidity to ensure that the growth continues. So that's happening on the ground. But actually what's happening on the face of it is all this bad news about the tariff and all the impact and the kind of sentiment attached to it. So if there's any change, and this is really where you hit the nail on the head, that if there is any change, either in the stance that the US currently is taking or an allowance for some kind of in-between, middle ground, then I would think that that will be a tremendous boost for sentiment and it'll change the entire picture altogether. And suddenly all of the things that we talk about, which are being ignored, will not remain ignored. So for a long time, I think, the news has been pretty depressing. And if there is any change in the news per se, I think we are in for a pretty significant up move from there.
Okay, all right, Tushar, good to see you in. Thanks a lot for joining in. We'll wait by. Hopefully, there'll be some kind of a movement. Mr. Trump goes a little bit easy, because that seems to be the sentiment driver. Numbers are mattering less, but I think the sentiment driver is definitely what Mr. Trump is going to do next.